All right, welcome back everybody to Altcoin Daily, where you subscribe for our daily videos, keeping you informed on a daily basis on everything that goes on with Bitcoin, crypto, the whole market. Feel free to subscribe to the channel, join our team. In today's video, we're going to start off by quickly taking a look at the price action of Bitcoin. We're going to transition into some recent news and a new study and new data. And then we're going to transition again into overall perspective. I'm still on my journey to try and figure out which coin is going to stand the test of time, which coin will be here years to come, and perhaps provide the greatest return on investment for me. Because that's what it's all about, right? I want to get rich by investing in Bitcoin and cryptocurrency. We see these 30-40% swings almost on a daily basis. On the more long term, we see 100x, 1000x. That is definitely still possible. But you have to be smart and you have to be in tune with this stuff. And overall, do your own research and use this video as a starting off point. A lot of value in today's video, and let's jump right in. Taking a look at the price action of Bitcoin in the last 24-48 hours, we can see that Bitcoin took a little bit of a tumble. Well, right now, Bitcoin's price is at about 8,660. Just the other day, we took a tumble from about 8,700. Having a nice clean bounce off the 100-hour moving average. We bounced at about 8,450, and like I said, we are at 8,600. So we're consolidating very near the 2019 high of 8,930, and we will see what happens. By the way, guys, if you appreciate this video today, if you want to support the channel, do me a favor, hit the like button. Liking the video, it's a small thing you can do. It truly does help us grow as a channel. Let's move on to some news. So there's a new report that came out, and basically the conclusion is that through an assessment of the accumulation that was going on in the past year, we can see that big money took advantage of the cryptocurrency winter to accumulate Bitcoin. So a fresh report is shedding some light on how Bitcoin holdings have shifted. Specifically, it suggests that big money took advantage of the cryptocurrency winter to dramatically increase the size of their Bitcoin wallet. Big money took advantage of the cryptocurrency price dip. So this is a new report courtesy of Diar. The full report is right here, and links to all this stuff is in the description. It's very interesting. It basically highlights how the distribution of Bitcoin holdings has changed significantly since August of 2018. So the report details how the number of wallets holding between 1,000 and 10,000 Bitcoins has increased sharply. Subsequently, the report could reveal that these Bitcoin addresses were mainly of firm size. As such, this accumulation was chiefly driven by big money firms. So if we take a look at the actual study, we can see that this details the change between August 2018 to May of 2019. The numbers represent the difference, not the total holdings. And the 1 to 10K Bitcoin excludes the Bitcoin that is likely held by Coinbase. So they try to be as fair and transparent as possible. And so this is the change from last year. You can see now the retail sized wallets holding between 10 and 100 Bitcoins to less than 1 Bitcoin, these have all increased in the past year. One of these represents me. I'm not going to tell you which one. Just kidding. But also the firm size wallets have actually significantly increased as well, while the exchange wallets have went down for some reason. I'm not sure exactly why. Perhaps they were just moving to different exchange wallets. We can see that firm size wallets, we're not sure exactly who these wallets belong to, but these wallets are accumulating between 1 and 10,000 Bitcoin. And this suggests that big money took advantage of the crypto winter and the associated price dip to refill their Bitcoin wallets. Consequently, the article concludes that firm-sized Bitcoin addresses now own more than 26% of the circulating Bitcoin supply. This is smart money, right? It is also worth mentioning that it was not only big money that took advantage of the crypto winter, also retail size wallets also increased with 126,000 Bitcoins added. Very interesting times. Moving on. If you hold your cryptocurrency on a ledger, which I do, you will be pleased to find out that Ledger Live has finally added support for Batch 32 addresses. So what does this mean to you? Well, Betch32 addresses starting with BC1 are native SegWit. So this is a SegWit thing, which provides a number of benefits. For instance, 40% cheaper fees compared to the legacy addresses starting with 1. 10% cheaper fees than wrapped SegWit addresses starting with 3. So I think if you have your Bitcoin or anything on the ledger, it does start with 3 already. Your fees will be 10% cheaper. Confirms will be faster on average. I like that. It uses less space in the blockchain, so this helps scale Bitcoin without putting extra pressure on the nodes, preserving decentralization. I like that. Improved error correction, easier to spell or write down because it's all lowercase. So this is very good. And if you don't have your Bitcoin on some sort of cold storage device, I recommend personally the Ledger. Also, I heard the Trezor is very good. But if you don't have if you don't have a cold storage device, feel free to go in the description of any of our videos and check out the Ledger store by using our affiliate link, and you can shop around. I have the Ledger Nano S. We just got the Ledger Nano X. Haven't got a chance to try it out yet, but if you're invested in crypto for this life-changing wealth, treat your cryptocurrency as such because it could be worth a lot one day. All right. Let's move on to our final news story, and then I want to finish off by talking about this cool website right here. This provides so much value and perspective. Well, we'll get to this in a second, but just so you know, the US Congress think tank now claims that Bitcoin is used mostly as an investment vehicle. So Bitcoin and cryptocurrencies are used as a speculative investment tool and not as money. A report by the United States think tank, the Congressional Research Service, CRS, claimed on May 10th. Although price data on Bitcoin illustrates the public interest in and overall demand for this cryptocurrency, it is a poor indicator of how often it is being exchanged for goods and services, i.e., how often it is used as money. Certain analysis appears to show that digital currencies are not being widely used and accepted as payment for goods and services, but rather as investment vehicles. Now, if you've been subscribed to us for a while, you know this is not a problem. It doesn't make sense for people to spend their Bitcoin right now, or at least that much, when you and me know in a couple years, Bitcoin's probably going to be worth astronomically more. So it doesn't make sense for people to use it as a type of money right now. And if you look into the history of how anything has ever turned into money for a community or for humanity, it always transitions the same way. It starts off as a collectible, it then becomes a reliable store of value, and then a medium of exchange, and the last step before full global money is a unit of account where things will eventually become priced in Bitcoin. Now, right now, you and me are between digital collectible and reliable store of value, and it's not a problem right now that people aren't spending it a lot. Just holding Bitcoin is proving its use case. In the coming years, it will be seen, I think, as a reliable store of value. And then eventually we'll get to medium of exchange. This is something the Bcash crew does not understand. We'll get to more on Bcash in a second. Now I want to talk about this chart and talk about how Bitcoin is the most secure compared to all other altcoins and cryptocurrencies. And I want to start off by a question that was asked on our Bitcoin. Now, this question, it's obviously from a troll. This information in it is not necessarily true. This person is obviously just somebody who is probably on the Bcash team. It's a troll. But the question in essence was this. So I synced my Bitcoin node, but sending transactions, I have to pay way too much. The fees are way too expensive. Bitcoin is going to fail. Now, I liked what this person had to say in his response. All crypto transactions have 3 central metrics: fast, secure, and cheap. Bitcoin is always secure, and depending on the transaction fee that you set, it can also be fast or it can be cheap, but it will rarely be both fast and cheap. Now, many other coins will tell you that, many will tell you that other cryptocurrencies have all 3 of these characteristics, but these other cryptocurrencies are not as secure as Bitcoin. Case in point, this website, howmanyconfs.com, takes the time, does the math to figure out, based on Bitcoin's level of security, how all other proof of work altcoins compare. And if you want to see the detailed metrics and how this is actually calculated, click on the asterisk right here or go in our description. And this is the GitHub. and you can see how these values were calculated, and it will simplify. And basically what you need to know is that, for instance, if Bitcoin, once it goes through 6 confirmations, it is pretty much locked into the blockchain, incredibly secure, and this takes about 50 minutes to do this. Now, this may seem slow when another proof of work altcoin can get through 6 confirmations in a lot less time. But the reality is, because these coins don't have the same security, they don't have the same level of hash rate that Bitcoin has, 6 confirmations to them doesn't equal the security that Bitcoin has. For instance, take Ethereum. It would take Ethereum 1,248 confirmations to equal 6 confirmations in the Bitcoin blockchain. And over 4 hours to do this, Ethereum is in essence 6 times slower for the level of security. Bcash, 24 times slower. I mean, go through the list. You can see that essentially nothing matches Bitcoin's security. Even, let's try and find a really, okay, Verge, it would take over 200,000 confirmations. It would have to be confirmed for over a year, and it is 11,000 times slower than Bitcoin. And feel free to click on the asterisks and check out exactly how this is valued and calculated, and it is very interesting. I want to finish up specifically talking about Bcash and just going through the list of why Bcash does not measure up to Bitcoin. Now, if you talk to Roger Ver, his main selling point is that Bcash is faster. Well, we know that fastness isn't necessarily the primary use case for Bitcoin and cryptocurrency. I mean, if you want the fastest form of payment, just Venmo your friend or use a credit card. A centralized authority will be way faster. But with a decentralized, more secure, hard money like Bitcoin, you get a lot more. So just talking about Bcash. So Bcash is still more than 20 times slower than Bitcoin. It takes 20 plus hours to equal 1 hour of Bitcoin security. One Bcash address does over 50% of Bcash's on-chain transactions. It's centralized enough that miners recently reorganized the transactions, so it's not really decentralized at all. And almost 0 protocol developers are on the GitHub for Bcash. At most, they just copy the latest Bitcoin developments. Very interesting stuff. And then the source is the website I just shared with you. Is there a linear correlation between hash rate and security? Hash rate is what is used to measure on-chain transaction security. There are many other ways to measure security, including code quality, and so on and so forth. But Bitcoin has the largest hash rate. All right, guys, if you found value in today's video, feel free to give it a like. Join our team for daily videos like this. And yeah, right now Bitcoin's price is 8,600. It's going to be a great year, I think.